Hi friends, welcome back to my channel, and today we are going to see the one more admission of a partner, that is ninth problem from CBCS syllabus RP Trivedi. Right, look at the problem. Ninth one is the following was the balance sheet of Vijayananda Chari and Suresh, who were sharing profit in ratio of 3:2 on 31st December 2005. Now balance sheet is given. They agreed to admit Srinivas into partnership on the following terms. Srinivas was to be given one-third share in profits and was to bring 25,000 as his capital and 10,000 as his share of goodwill. That the values of stock and plant were to be reduced by 10%, that a provision of 5% was to be created in respect of sundry debtors, that buildings account was to be appreciated by 20%, and that the goodwill amount was to be withdrawn by the old partners. So draft journal entries to give effect to the above arrangement and prepare the opening balance sheet of the new form. Right. Now look at the problem. Here first of all what we have to prepare is journal entries. So that is ninth solution, journal entries. So first one is what we have to draw, and that is Srinivas was to be given one-third share in profits and was to bring 25,000 as his capital and 10,000 goodwill. So we have to add up all both this amount, 25,000 and 10,000. So that is, so whatever the new partner is bringing capital and goodwill, that must be deposited into the bank. So bank account debitor, bank account DR to Srinivas capital, because he is the giver. Srinivas capital account. How much it is? 35,000. 35,000. Then second one is, now whatever the goodwill is there, that will be shared among the old partners. So Srinivas, so debit the giver na, Srinivas capital account DR to Chari capital account to Suresh capital account. So 10,000. So what is the share of the partners? 3:2. So 10,000 into 3 divided by 5 and 2 divided by 5, that is comes to how much it is? 6,000 and 4,000. So being goodwill shared among all partners. Then what is the third entry here? Now whatever the goodwill, that has to, again we have to show, right? Chari is receiving and Suresh is receiving. So bank is paying 10,000 goodwill to the both the partners. Chari capital account DR, Suresh capital account DR, to bank account. So credit the giver. Bank is giving to both of them. That is 6,000, 4,000 and 10,000. Now what is the next entry here? General reserve. Look at the problem. The general reserve is there, like 30,000. 30,000 into 3 divided by 5. How much it is? 18,000. And for Chari it is 18,000. Again 30,000 into 2 divided by 5. 12,000 is for Suresh. Now fourth general entry, that is sharing of the general reserve. General reserve account DR to Chari capital account to Suresh capital account. How much it is? 30,000 and 18,000 for Suresh 12,000. So again, being general reserve shared among the partners. Now, what is the fifth journal entry? Fifth journal entry. Now look at the revaluation. Okay. So after these all these adjustment, and now look at the values that are reducing and increasing in the assets and liabilities. That the values of stock and plant were to be reduced by 10%. So how much the stock value is there? Plant and stock is 20,000 and plant and machinery is 55,000. How much, up to how much it is reducing? 10%. So 20,000 means into 10%, that is 2,000. It comes to like 18,000. Okay, then 55,000 into 10% minus 55,000, so 49,500. Is it clear now? Okay, then look at the stock, that is 2,000 and 5,500 is decreasing, and provision for debtors, that a provision of 5% was to be created in respect of sundry debtors. Sundry debtors, how much sundry debtors are there? 10,000 into 5%, then 500. Now all this amount we have to debit it to which account? Revaluation account. Revaluation account. Why revaluation account is prepared? To know the profit or loss of the business. Then to stock, how much it is? 2,000. Then to plant account 5,500. To provision for doubtful debts, that is 500. Comes to how much? 2,000 plus 5,500 plus 500, 8,000. Now on debit side 8,000. Now fifth entry is over. Now what is the sixth entry? Sixth journal entry, that is buildings. That buildings account was to be appreciated by 20%. How much buildings are there? 50,000 in the question. Okay, into 20%, that is 10,000 is increasing. So 10,000 directly we have to credit it to the revaluation account. Debit all expenses and losses, credit all incomes and gains. Right? Revaluation is based on the nominal account rule. Debit all expenses and losses, credit all incomes and gains. So that's why we are crediting to the revaluation account. So building account DR to revaluation account. How much it is? 10,000 and 10,000. Being buildings are appreciated. Right. Then seventh journal entry. Now look at the difference value. Right? That difference value of credit and debit of revaluation account. Now look at here, revaluation account. Now how much debit side it is there? 8,000. And how much it is there? 10,000. So which is the amount is higher? So credit amount is the higher. Okay, 10,000 minus 8,000 means 2,000. So 2,000 is the profit. Okay, revaluation profit is 2,000. Then this 2,000 will be again have to distribute it to the old partners. So again that will be done on the debit side of the revaluation account, because the debit side is the lowest amount. So revaluation account DR to Chari account to Suresh account. How much it is? 2,000. So 2,000 into 2000 into 3 divided by 5, 1200. Is it clear? 1200 profit for the chari, and remaining 800. So I will do again. 2000 into 2 divided by 5. 800 is the profit for Suresh. Okay. Now till here we have finished the journal entries. Now which one, what we have to prepare now? Directly balance sheet. Why? Because see here in the question only he is asking us to prepare journal entries and prepare the opening balance sheet of the new form. Is it clear now? Now prepare the balance sheet. Okay, till here the journal entries are finished. Then balance sheet. Balance sheet as on 31st December 2005. Okay. Now this is the balance sheet. Liabilities, amount, assets, amount. Now look at the problem. Creditors, how much creditors are there? 60,000. Creditors 60,000. Is it clear? And now chari capital. Chari capital. Okay. What is the chari capital here? 30,000. Right. Balance is 30,000. Okay. Now we have to add up all the things. What are the amount it is getting to the chari? Now plus general reserve. General reserve. How much it is? 18,000. Then again plus goodwill. Goodwill. How much it is? 6,000. Okay. Now plus profit. Revaluation profit. How much it is? 1200. Is it clear now? Now comes to, you have to do the total, that is 30,000 plus 18,000 and 6,000, then 1200. How much it is? 55,200. Now whatever the goodwill withdrawn, look at the problem. Look at the problem here. That the goodwill was to be withdrawn by the old partners. Okay. How much goodwill is there? How much goodwill is there? Now 10,000. So whatever the 10,000 that share, this share is distributed among the old partners, they have fully withdrawn in the business, that in that year. Okay. Now minus again goodwill. Once they have got it and they have added up here 6,000, now again we have to subtract 6,000 because they are fully used and they have withdrawn. Now again 55,200 minus 6,000 goodwill. How much it comes to? 49,200. Okay. Right. Sorry, again we have to extend the balance sheet here. Right. Now here again this is the chari total. Now we are looking at the Suresh capital. Suresh capital, how much Suresh has brought here? 20,000. Balance is 20,000. Okay. Then plus general reserve, how much it is? General reserve is 12,000 plus revaluation profit. Revaluation profit is 800. Again goodwill plus goodwill 4,000. So now 20,000 plus 12,000 plus 800 plus 4,000. So comes to how much it is? 36,800. again minus goodwill withdrawn. How much it is? Like 4,000. Now outer column, how much we have to take? 32,800. Is it clear now? So 32,800. This is what we are going to take. Now Srinivas capital. How much Srinivas has brought the capital into the business? Srinivas capital, that is, right? Look at the problem, 25,000. His share of he is bringing the capital into the business is 25,000. Then again come to the asset side. Now cash at bank. What is the cash at bank here? Cash at bank. Now balance, how much it is there? Cash at bank balance is 5,000. And now whenever in admission of a partner, the new partner is bringing the goodwill and capital. So whatever the capital and goodwill is bringing to the business, now we have to add it up to the cash at bank balance, because whatever the cash capital and goodwill is bringing, that at the moment they will deposit into the bank. So bank is the receiver. So bank is the receiving the 25,000 and 10,000. That means we have to add here this amount. So Srinivas capital 25,000 and Srinivas goodwill 10,000. Now how much is the total now? It comes to 10, 25, 35, 40. Is it clear? Now again minus from this 40,000, whatever the goodwill is there, again we have to do minus from here. The asset side also we should subtract this goodwill withdrawn. Goodwill withdrawn by the partners is total amount, that is 10,000. Again 30,000 is the outside. Now this is 30,000 the balance. Then comes to the debtors. Now debtors, how much the debtor is there? 10,000. Then less provision, 5% provision is how much? Less provision, that is 500. Comes to how much? 9,500. Okay, then stock, how much is reduced to 2,000, that is 18,000 is outer column. Then plant and machinery, okay, it comes to like 49,500 because we have deducted that 10%. Now buildings are appreciated. Okay, how much building cost is buildings amount is there in the balance sheet? Asset side 50,000 is there. So appreciated 20%, that means 10,000. Okay, now whatever the 10,000 is there appreciation amount, we should add it up to the 50,000, that it comes to like outer column 60,000. Now after that you do the total for both the sides, whether it is matching or not. Okay, now asset side 30,000 plus 9,500 plus 18,000 plus 49,500 plus 60,000. How much it is? 1,67,000. Now look at the problem. Under the below the problem, that answer is given, right? Answer, revaluation profit 2,000, balance sheet is 1,67,000. Now you got the answer 1,67,000. Now you give the total 1,67,000 here also. Now here look at this credit side, 60,000 plus 49,200 plus 32,800 plus 25,000 capital. Now here also it is tally, right? So now the amount is equal to the liabilities and assets. So 1,67,000. So this is how we have to do the admission of a partner when the question comes in this way. Okay guys, thank you. If you like this video, I hope it is helpful for you. Please like and subscribe. Thank you.